Welcome to The Alternative Investor. Real estate can be an alternative for those unable to withstand the volatility of the stock market. Rental property investing is the preferred investment strategy for investors who want an additional source of monthly income, along with a slow but steady appreciation in the value of their portfolio. When it comes to residential real estate, there are two main types of properties that one can invest in: single family and multifamily. This afternoon, we discuss multifamily real estate with Jonathan Loeb, who is the head of Westbrooke USA Real Estate. Jonathan, thank you so much for your time this afternoon.
Hi, Anastasia. Thanks for having me.
So how do we define multifamily real estate for a South African who's hearing it for the first time?
Sure. So simply put, I would picture a large residential development, picture Summercon or Borwin, but instead of each of those individual units being sectionalized and sold, the entire complex is held under one title deed, and those units, 100, 200 units, are all owned collectively, and they're rented out individually to tenants on an annual basis.
All right. So what makes this particular, sector very attractive for investors?
Sure. So I think what we found very attractive about multifamily investments and our focus, as you mentioned, specifically on the USA, is that the multifamily market, the rental market in America, has been extremely resilient through the economic cycles. And we saw it quite significantly through the 2008 global financial crisis. And again, through COVID. I mean, when times are good, multifamily has been good. When times are okay, it's been good. And when times are bad, it's been good. And what's the reason for that? I think they varied. There's a huge percentage of the American population that rent. And these are defined as renters by necessity, renters by need. They can't afford a home. And as well as more and more over the last decade, renters by choice, where you have younger people not wanting to commit to buying a house. And you also have older folks who are retiring and don't want to be locked into a particular property. They want to be able to travel and that sort of thing. So I think, obviously we in our properties have a diverse pool of tenants. They employed across multiple sectors, multiple companies, that sort of thing. Whereas in other areas of real estate, you may have a strong tenant, but in commercial or retail, you could have one big tenant occupying the entire property or a large percentage of the property. And if that tenant moved out, you'd have drama. And basically in multifamily, we've seen the resilience because of this diversity of your tenant pool. You may have a couple of people who have a hard time in the job market, but it's always going to be a small percentage of the total number of people that live in your multifamily property.
What do you make of the U.S. housing market?
Sure. So, it's a very broad question. America's a big place. I think we've seen, obviously, some pockets of weakness, particularly in the big cities, New York, and San Francisco. We've read about a lot in the press, having seen a major shift, particularly now through COVID, where people have moved out looking for bigger properties, more space, as people have spent more time at home. I'm not sure if that's a permanent feature, probably not. But on a whole, the housing market has remained very, very strong. And it's been interesting to see. Your last guest mentioned the stimulus. And now the stimulus in America has not just been general stimulus in the economy. There have been specific checks received in the mail by a huge percentage of the American population. So that's obviously had an impact, and it's very hard for us to know what the housing market would look like without that stimulus. But in addition to that, through the crisis, through the pandemic at least, the home was always important, and it's become even more important. It's become your gym, your entertainment center. I'm in my office right now, my study at home. So I think people have placed more reliance on their home.
So when we look at the risk profile of somebody who would look at multifamily real estate, who are we talking about? What are the kind of people that should be investing in this?
So, I mean, as you mentioned, we're on an alternative investment segment on your show, and it is alternative. I think the rationale for that is we investing into direct properties, and property by its nature is more of a long-term investment. So your investor would have to have a more long-term investment horizon. I mean, I'm a property guy and very bullish on property, so I find it to be quite a safe asset class. I like the fact that there's a building that I can look at, and not if I get lonely, I can go and see it. So that's always been positive to me. So I think it's in the medium risk profile. I don't believe it's a high risk investment, particularly where we investing. And yeah, as I say, but with a longer term horizon.
On that note, then, what kind of returns are we looking at?
Sure. So, I mean, it depends. I think every investor will say this to you. It depends what level of risk you take. But typically, we are buying properties that are stabilized. That means they're already occupied, they're already built. We're not taking the development risk. Obviously, if we were going to build a property from scratch, we would look for very different returns. But the returns I'm going to talk to you about are more for stabilized properties where we are adding some value. We often renovate a number of the units. We'll buy a building with older units and rehab some of the interiors, new kitchens, new bathrooms, put in a tech pack with an Amazon Alexa and a home automated thermostat, those sorts of things. So we do upgrades to enhance our returns, but it's typically we're buying stabilized assets. And the returns we target are in the mid to low teens, call it 12 to 15% annual IRR in dollars. And of that, call it 5, 6, or 7%, depending on the year, is paid out as an annual dividend to investors, with a balance in the growth of the property value, the balance we'd realize upon a sale.
All right, Jonathan, we'll have to leave it there. Thank you so much for your time. That is Jonathan Loeb, who is the head of Westbrooke USA Real Estate.